everyone. Welcome back to All Things Real Estate. I'm your host, Terry Lajoie with Keller Williams Coastal and Lakes and Mountains Realty. I've got my co-host here, Shaun Sanville with Oak Hill Acquisitions. And we have our guest today, Tony DiPardo with Trusted Essential Services, talking to us about health sharing. So first, Tony, welcome. Tell us who you are and a little bit about what you do, and then we're going to get into the health sharing and kind of unpack that and why it's important for homeowners in particular.
Excellent. Well, first, good morning and thanks for having us on, and thanks for helping us get the word out about our alternative to traditional health insurance.
Yes.
So we offer an alternative to traditional health insurance. It's health sharing. And it's available for any individuals, any business owners, especially business owners that have less than 50 employees. We offer group rates, and in my opinion, it's an outstanding alternative to traditional health insurance.
Let's talk first. What is health sharing?
Well, thank you for asking.
Because that's a big piece. You've said it twice already.
Yep.
So let's start there. What is health sharing?
Well, health sharing is not a new concept. It's been around for decades, and it actually began and started through church groups. Mm-hmm. And it was literally, you might have a congregation, either the pastor needed a procedure, operation, a medication, or somebody in the congregation, and they would literally pass around a hat, and people would take and start putting money in that hat. And that's, for anybody that needed it, that they needed that extra help. So that's been evolving over time, where there was formal organizations that arose out of that. And it came where you would send in your money, your monthly share monthly.
So is that kind of like a membership?
A membership, yeah. So you would send in your share monthly, and then if you had say your primary care visit, or you had another need for a provider, you would pay out of pocket in advance, and then you would put a claim in, and you would be reimbursed from that. So it's been evolving over time, and there's several different organizations that have emerged, and ours is one of the latest and greatest. Absolutely, it's definitely growing. And now we've been able to merge technology and use computers to facilitate that. And really, it's an industry disrupting and new innovation and approach to health sharing, and we think it's fantastic.
So what happens if I have a health sharing program instead of a traditional insurance plan, and I have to go to the emergency room? Like, what does that process look like for somebody that needs to go through that? Like, explain how that works.
All right. So for some of the health sharing programs that are out there,
let's talk about yours.
Talk about ours.
Yours, no, because that's what you do every day. So you're going to know that one really well. So let's talk about yours. How does it work if I'm in your health sharing network and I have to go to the hospital? How does that all work? How does that bill get paid?
Excellent. So, and that's an excellent question, because it points out a lot of the differences and the benefits of having health sharing, which is not insurance, over traditional health insurance.
Right.
With traditional health insurance, you're limited to being in network or out of network. So we're in New Hampshire. If we had traditional insurance and it was out of Concord, it probably wouldn't be covered, a few miles away down here in Nashua, and certainly not in Massachusetts or Connecticut or Maine. We'd be out of network. Ours, there's no in-network requirements. So no matter where we are, if we're traveling down in Florida, if we're out in Washington, no matter where we go, we're in network because there's no network requirements. So when we check into any emergency room anywhere in the country, we're health sharing, but it feels like traditional health insurance because we have a health sharing membership card.
Right.
And on that card, there's a EDI number, which are the management, the owners of our health sharing organization have paid, to have the EDI number, which is electronic data interface.
Right.
And that allows them, if they don't have our specific health sharing listed in their drop-down box when you go to check in, they might have commercial insurance. And so you ask the person behind the counter there, under the commercial insurance, put our EDI number in and put our membership ID, and that allows them to bill our organization directly. And then we just visit you visit the providers, and that's it.
I'm gonna stop you right there because I want to talk about those numbers.
Yeah.
The EDI number would be similar to what an insurance company would have on their card.
Yeah.
And the ID, the membership number, is similar to what your ID would be on a traditional health insurance card.
Exactly.
So as far as the cards go, and from the provider standpoint, they're very similar.
They're very similar. The
process, the behind the scenes is very different, but what the hospital goes through is very similar.
Right. And to be completely open about it, many providers, many emergency rooms are more and more accepting different health sharing organizations.
Right.
Some of them have, or some of them won't, will say, all right, we're not going to accept this card. In which case you have to pay out of pocket as a walk-in. And then, but afterwards you would file, a claim with the organization, and they would reimburse you for that visit.
Now, can you, if they don't accept it, the facility that you go to, whatever that is, if they don't accept it, do they put you in as like a self-pay and then they bill you directly?
As a self-pay, right, and then they pay you directly.
And so if you wanted to, you could take that self-pay bill that you got in the mail,
yeah,
send it in, get the reimbursement, and then pay it, and you still don't have actual money out of your own pocket other than what your out-of-pocket is for your plan.
Exactly. In some cases that is the case. And in some cases, whether it's an emergency room visit or an actual illness, the organization will step in and say, they'll connect with the provider and say, hey, we're going to take care of this.
Nice.
And so that's an excellent feature. It's very it's more personal.
Right.
Yeah.
Yep. I love that.
Yeah.
I love that. So talk about because I know there's a way of reducing your out-of-pocket with what you have, with the cost sharing that you have.
Exactly.
You have an annual out-of-pocket, correct?
Yep.
And there's a way of reducing that. Talk about that, because that's a big piece. Because you guys, one of the big things, you guys want to keep people healthy. And you kind of pay your members to do that. So how does that work?
Exactly. There's actually 3 questions in there, and hopefully I can remember all of them. But to follow up with your, just a emergency room visit or another provider, if you're, if you have referrals from your primary care provider, and what happens to that bill afterwards. So once you go to the emergency room or provider, and that's transferred electronically, it goes over to the organization, and for example, I had, I don't need a referral from my primary care, but I had an incident, it was just last February, and I injured my shoulder. It wasn't injured, it was a calcium. And I went to the provider, gave them my card, they put it under commercial insurance. They sent it over electronically on my membership page, because you have a membership page once you become a member, and it shows, it shows your account. Right, and how much money is in there and whatnot. So that bill went over, came back from the provider at $1,800. From there, it was negotiated from $1,800 down to $307. And they negotiate based on fair market value, which is based off of basically Medicare, Medicaid pricing, because they have to provide Medicare pricing. So the organization is advocating based on fair market value. they ask for a detailed bill, how long you were there, what procedures who did you see, how long did you see them, are these fair pricing for anything?
Right.
So just that alone, and then it comes off of going back to the other question that you had, what's your maximum out of pocket? Because that's huge.
It is.
It's huge for traditional health insurance, whether people understand exactly how much it's going to be. So when you become a member of our organization, there's 4 different levels. We don't call it a, what's the deductible? The deductible. Because it's not insurance, you have to differentiate that it's not insurance, it's health sharing. So we call it a primary responsibility amount or a PRA.
Right.
So under that PRA, when you become a member, you get to choose what level of PRA that you want. So it's either $2,500, $5,000, $7,500, or $10,000.
Right.
So first, your monthly share that you pay, it's not a premium, it's your monthly share, is usually typically 30 to 70% less in comparison to traditional health insurance.
That's a big difference.
Right, and you pay a little bit more if it's that $10,000 PRA, or you pay less if it's the $10,000 PRA.
Because you're absorbing more of the risk.
Right. But in my family, we have the $2,500 PRA. So when I went to visit the doctor there for my shoulder, that $307 came off of the $2,500 PRA. So for last year, we never even met our PRA of.
But there are other ways of meeting that PRA, right? Like if I want to go to the gym or.
That's one of the things that I like best about it, and I can explain that.
Yeah. So what are some of the other things that can reduce that?
Well, and actually because I want to get to that also, but the maximum out of pocket. So we're paying our monthly share, right? And we can see, because with this, it's different from traditional health insurance. You have a membership page, and it shows how much they set up an account for you. So it shows how much is in your account. And when you when you have a bill that's to be shared, it shows that other people are sharing across the membership.
Right.
And or if somebody else has a bill to share, they'll take a little bit out of our account and it goes to share their bill. But if our family, because it's maximum out of pocket, we pay our monthly share, then we've got to meet that PRA, which everything's being negotiated. If we meet that PRA of $2,500, then we move over to another column. If I fall out of a tree, in the fall, raking leaves or splitting wood or whatever we're doing, and the bill comes out to $3,000 and it gets negotiated to $1,000, I'm only responsible for 10% of that. So it's only $100. So my maximum becomes very low. And so on and so forth until that column reaches $5,000. So it'd be the $2,500 PRA, then the $5,000. After that, everything's paid for 100%. Because exactly 100%. So you have your monthly share, your PRA, and then that maximum co-share column of $5,000. No matter which PRA you choose, it's still $5,000. And because we're promoting healthy lifestyles, it's Christian based, right? So we want to promote a healthy lifestyle, wellness, everything that's good for you. So any of those things, a gym membership. Say you have a family, maybe 2, 3, 4 kids. You want to go to the YMCA. Maybe you have a personal trainer. Now you can see a nutritionist. A holistic practitioner, whatever you're spending on that, if you're already spending X amount of dollars on a monthly gym membership, $150 of that you can pay towards your PRA. So 25, so $150 times 10, right? It builds up pretty quick to pay that $2,500. Now you're over into that other column where you have the 10% co-share.
And
up
that's,
to
you're
5,000.
reducing that out of pocket with things that you're already paying for anyways.
Right. Or even if you weren't doing it before, now you can. Because if you go see a nutritionist, and we have lots of friends that do that kind of thing, you're gonna be in a much healthier.
Correct.
So we're promoting a healthy lifestyle. And I hadn't mentioned that. It's also Christian based. When you have those the amounts that we're quoting at 2,500, 5,000, it maxes out. You can either be an individual or a couple or one child. But if you choose to have, second, third, fourth, fifth, 10 children, it maxes out at 3
Right.
per household. It doesn't go up any higher. So that's a huge difference. And then the whole family shares that $2,500 PRA rather than an individual per family.
Which I love that.
I love that.
So, Shaun, first, you have questions. And secondly, because of what you do and what I do, I want to talk about how this can help the people that we serve on a daily basis, right? So first, you have questions for Tony, because this is all new to you.
I don't know if I have questions right now. I think it's more so just my mind is blown because I've only known the traditional insurance world. And then hearing about this, I'm like, why does everybody not participate in something like this? It kind of doesn't make sense when you compare the two.
It does. And I've shared my story with both of you guys. I used to have traditional insurance, and I had a major claim a couple of years ago. Had it gone to my old insurance, the bills would have been about $180,000. With my cost share, they were $40,000. I paid my primary responsibility amount, and they paid the rest. And that's a huge weight, because working with pre-foreclosures, you see that all the time. How many of the pre-foreclosures that you deal with every day are caused by medical bills?
In some way, shape, or form, a lot. Yeah,
A lot of them.
it's a lot.
And that's one of the reasons I wanted Tony to come on, is because of what we do every day and the people we help. We see this, the other side of it. And I've lived it, being in a cost share myself, to see that difference. So from your perspective, like, what are you hearing today? Because I'm going to shift gears. I'm going to put you on this hot spot a little bit. What are you hearing today that's kind of eye-opening for you?
I think the first and foremost is that other people are willing to share your bills with you, and there's a community aspect to it. I don't really hear that at all in corporate insurance world whatsoever. So definitely restores my faith in humanity a bit. I love the fact that you choose your essentially if I'm thinking of it as a premium. I know it's not the correct terminology, but
The out-of-pockets.
yes, you choose the out-of-pocket, but once you pay that, you move over to a next column where you pay less. And then once you pay that, if you go through that, you move to a column where pretty much everything's covered for you, which is incredible. I don't know if I'm assuming that's not how it works with traditional insurance whatsoever. I know they're probably going to nickel and dime you for everything that they can.
They do have an out-of-pocket max, but it's
far higher.
At least the one that I had, it was $100,000 versus $5,000
Yeah.
or $7,500.
Well, I mean, just to the everyday hardworking family that's trying to make ends meet right now, this sounds like an incredible opportunity for them, or just an incredible program for them in general. Because, I mean, some of the craziest stories that I've heard with folks in pre-foreclosure is I got hit by a drunk driver and was out of work for 6 months and had to have my hip replaced and this, and that. And I couldn't work. The insurance payments were eating me alive, all this stuff. So just to actually have an affordable, I want to call it insurance, but I know it's not, but to have some sort of...
But it's an alternative. It's an option.
Like healthcare.
Right.
To have some form of alternative healthcare help.
Right.
That could make the difference for people. At least from what I see, every day, talking to folks daily, that could make the difference for a lot of people, because now they're not getting slapped with ridiculously high bills. And I mean, most folks that I work with, they're great, hardworking people, but they're living paycheck to paycheck. They don't have, if something happens, they don't have reserves to fall back on.
Right.
And so a program like yours could really besides like helping people stay healthy and save their lives from a medical side of things, it can help people legitimately save their lives in terms of a financial foreclosure living situation.
The
which is
financial
kind of insane that something like that out there exists. And I'm assuming like you've talked to me a bit about the monthlies,
right.
the payments. It doesn't sound high at all.
They're significantly lower.
Significantly lower. And I can give a few examples to that.
Please.
Yeah.
Yep, absolutely. I have just a family of 4, both self-employed, so it's not corporate, right? But their premium went from $2,500 a month up over $3,000 a month. And I gave them a quote for $467.
Wow.
Right, so you're...
That's a huge difference. Can you repeat those numbers?
$36,000 versus about $6,000. So can you imagine if they save $30,000 a year over a 5-year period? That's a college education.
Yeah.
Right?
Think of how their life could improve overall just having that extra money.
Absolutely. Another lady I quoted, come out of a school system, won't mention which one, but they have the school system has COBRA, and so the cost for that was around $33.75 per month, and her share was $13.50, $13.75, right, for somebody that's in their 60s. Like, how can they do that? I gave her a quote. It was $187 a month for a single individual.
Wow.
The thing is, the taxpayers from the town are paying the town, the school system, to pay that, and nobody's paying for her. So it's actually coming out of the taxpayer money, and it doesn't need to be that way. And there's there's another just a general contractor. And he's on Medicare, Medicaid, and lost the supplement, right? There's 77,000 people that lost their supplemental insurance. The insurance companies dropped it in New Hampshire. It would cost him $93 a month with $1,000 PRA, right? And that's significant for somebody
huge.
That's in their late 60s. Would have cost him $93 a month. He had a knee injury, and now it's $5,000. And so he's hit significantly at that age to be hit with that kind of bill, and you just can't pay it.
Yeah.
Right.
And so that's what we're seeing is the premiums are going up so high that people are just priced out of it. Even if they wanted to pay for it, they can't. They can't afford it. Some people can, and younger people might take a chance. And so we're seeing more people just taking a chance, keeping their fingers crossed, hoping that, something's not going to.
But at the end of the day, and again, I'm going to come back to you, Shaun, because we see this every day. You take that, you roll the dice, right? And you say, I'm gonna just pray that nothing happens. And then something happens. And now your entire livelihood is at risk. You're sick or injured. You can't work. Don't have any money coming in, but the bills are still coming in. Your house gets behind, and once you get behind a couple of months, it's really almost impossible to come back out of that.
Yeah, the majority of folks don't when they get to that point. If they do, it's by some miracle, and very rarely, if they do get out of that, are their lives ever the same again. Usually things are very, very tight, and it's one wrong move away at that point. And it doesn't need to be. No, it doesn't. Well, this is super eye-opening for me because I am one of those young people that just crosses their fingers and hopes for the best. So, especially with everything that we do, all the people that we help, you see it every day. Yeah. Literally every day. I need to have a conversation with you after this.
Oh, absolutely. We can show you very easily. I should mention also, and I'm definitely not an expert because we have. It's an organization, and it's all a membership, and it's people, grassroots, that are telling other people about this. Right. And so I'm definitely not an expert on the details, but that part where I was saying the co-share, the maximum out of pocket of $5,000, I have to look at the statement of beliefs and the guidelines, because I think there is a cap. I don't know. I don't think it's up to $1 million or whatnot. But definitely, when I talk with somebody about that, I send them those the statement of beliefs and guidelines that show the maximum. But generally, I don't think people are going into the millions of dollars for injuries.
And on the other side of that,
yeah,
those caps are based on the negotiated rate, not what they would have charged a regular traditional health insurance company.
Right.
So there's a big difference there. Right. It takes a lot longer to hit any of those maximums and the caps.
Yeah, and
because
it's the same with traditional insurance also. They have caps.
Correct.
But I just wanted to make sure I mentioned that, and I don't want to give people bad information.
No, definitely not.
Yeah.
No.
Yeah.
This is kind of mind-blowing for me. Because, like, for me, I'm 28 years old, entrepreneur. I don't have a corporate insurance to fall back on or anything like that. And even when I was a W-2 employee, they didn't provide insurance.
Right.
So for years and years and years, I was just hoping, like you said, crossing my fingers, hoping for the best. And now to know that there's something affordable out there that is community-based and sounds so much better than normal insurance. And it's like, it's worth the conversation.
At 28 years old,
we're going to have to wrap up here in a second.
28 years old, your monthly share with a $10,000 PRA is $73 a month.
Okay, yeah.
That easy. And you go right away, get your blood work, it's paid for. We have a concierge service.
Tony,
yeah.
I got to cut you off. We're out of time.
We'll
I'm so sorry.
Absolutely.
But we are going to wrap up for today. Tony, thank you so much for coming on the show. I appreciate it. Hopefully we can have you back again in the future and we can dig a little bit deeper into this conversation and that. But in the meantime, you have an amazing day. Thank you, everybody, for watching. We'll see you back next week.